Okay guys, it's the 9th of February 2018 and this is just another little news and views video that you'll find on the YouTube channel and particularly in the news and views playlist. The point of this, I'm just going to ad-lib this guys, but I have a lot of things to tell you here. Recently the stock markets indexes, the stock markets have been taking a bit of a beating, a crash some people are calling it. Clearly it's not a crash, but you know, the news outlets like to tell you things are a crash to get your attention. But essentially I saw this particular story this morning, and you can find it on my Flipboard over here guys. This is where this is. If you're in Flipboard, I have a Flipboard magazine where I put all the things that I find interesting any particular day, including my own obviously my own charts and videos and things, but a lot of it's just interesting news stories that I find along the way, and they're all educational guys. They're all about trying to teach you something. So let's go back to our news story here. So essentially what this young lad did, I'll just read this. Buy low, sell high. The tried mantra was surely rattling around the brains of plenty of investors who saw opportunity in the whiplash US capital markets this week. Some brave amateur day traders, they're not brave, they're foolish, even dared to wade in amid the volatility. What could possibly go wrong? Buying Monday's rapid sell-off didn't end well for one 24-year-old financial analyst now in Vancouver. He wound up losing his entire savings and then some, about $10,000 in total. Okay guys, if he was a financial analyst, that wouldn't have happened. He had been dabbling in the stock market since July. Okay, so the guy's got 8 or 9 months exposure or experience, and he managed to pocket as much as $2,500 overnight. If you watch any of my videos on money management, on personal trading strategy, on trade management, you'll hear me say over and over again, sometimes the worst thing that can happen to someone is to get a bit of luck, is to win. Because what it does to them is it proves that their strategy is right, although it is absolutely wrong. So what this guy's done is he's been dabbling since July, as this article says. He's made himself $2,500 overnight. Something's moved very fast, and then he's thought, well, I really know what I'm doing now. So he piles a load more money in, and he's lost everything that he owns. Now he's young enough to come back from it, but guys, come on. I mean, this is ridiculous. Let's go and look at what he got involved in. We'll look at the S&P 500. Okay, I don't know if he was selling it or whether he waited for it to come down and then he got involved. This is on the what time scale is this? 4-hour time scale, guys, and this was being reported as a crash. If we go over to the Dow Jones Index, it more or less has the same shape. Okay, now if we take this time scale and we change it up to, say, the daily, it doesn't look such a big crash now, does it, considering how far it's moved up. Okay, if we take it back to the weekly, we really get it into perspective. Guys, it's just a correction. And anyone who knows anything about Elliott wave theory will tell you that not only is it a correction, but it isn't over yet. As I suspect that it'll do something like this, and it may come deeper, and it may turn and continue up before it comes deep. But the point is, it's going to correct, and it's going to correct a lot more. It might be next year, or it might be now. I suspect it's probably now. Now, I want to take you to a video that I released This was an analysis I did of the S&P. Now guys, I don't trade this index, but someone had asked me to do an analysis for them. And this was the analysis that I released on the 4th of November, which, we go back to that chart, is there. Price was there at the time, and this is what I said. And the reason I say it possibly isn't finished is because if we look at the scale of this, which is a flat correction, an A, B, C, with C just coming below A, that's a perfect flat correction. If that's 2, then 4 has to be of a similar magnitude. And because of alternation, it probably won't be a flat. The chances are it'll either be a triangle or it will be a zigzag. Now, a zigzag of that magnitude would have to look something like that, which brings it very, very low. And I don't like that setup. So what I would suggest is that this third wave needs to push on up a good bit first before we get something like that. So keeping that in mind, we're in the third wave, and I think it needs to push higher, but obviously once we get closer, we can look for trades to see whether we can get one going long. We're looking for this. We're looking for a turn somewhere here, maybe it's a bit further up, and then we're looking for that trade down. Remembering this is in the weekly, guys, and we could still push up from here. So basically next year I'd be looking for a pullback. Okay guys, you can see from that I clearly said that needed to correct, but I suspected that it needed to push further up before we'd get our correction. And that's exactly what is in progress right now. Let's take it back down to the 4-hour time scale. So back on the 4th of November, around about here it was. Let's just get that absolutely correct. That's the 7th, 4th. There's where we were on the 4th of November, and I said that it needed to come push further up before we got a correction. Now, what has it done? It's pushed further up, and now we're getting a correction. I suspect, if we zoom in on it, I suspect it's got a bit more to come down. It may turn there, guys. It may push on down to come to there. But the important thing is, for us as traders, is how on earth do you get involved in that? This is a 4-hour chart, guys. I don't see how anyone could get involved in that, because all you're doing is gambling, and that's exactly what that young guy did. He's being described as an analyst. I don't know how you would get involved in that, guys, because it hasn't made any sort of entry structure, certainly not by the rules that I trade by. You don't just wait for something to go down and then jump into it because you think it's going to come back up again. That's called catching daggers, and you're not going to do it. You're going to lose your account trying to do that. What we need to do is let it develop a little bit, make some sort of structure, wait to see what's going to happen there if it gets to there, and when we see it breaking up through our structure and giving us some sort of entry point, then we can open a trade and manage it as it rises up. You can, if you try and jump into these things, guys, if you try and make $2,500 overnight on account size was less than $10,000, but he got a margin call and he had to borrow on his credit card. Let's just read it again. When he noticed the Dow Jones Industrial Average plunging on Monday, a sell-off that would go down as the biggest daily point loss of all time. I mean, that's ridiculous. For a basket of 30 major US companies, he couldn't resist. He fired up an app on his phone while at work and started placing orders through his broker. He transferred $4,000 into his trading account and started buying CDFs. Okay, we know what they are. He got marginal called a few times, meaning the broker insisted that he put more money to meet the minimum requirements, and he ended up using his credit card to help stay in the game longer, investing a total of $10,000. It wasn't enough. The broker closed it because they didn't have the money. Guys, not only did he get in at the wrong time, but he didn't have a stop loss. He has no trading strategy. Okay, that's enough for a wee rant for today. Guys, don't use credit cards to invest. Have a trading strategy. Don't see markets moving fast and jump into them. Wait until they settle down and then trade them back up or back down, depending on which they've done.